Today is Monday, March 25th. We have a shortened week. We got a lot of news though, so let's get into it. So, biggest thing that we have so far today, Boeing CEO is planning to step down. He's given the board plenty of time to find a successor for him. He's going to be stepping down at the end of the year. We're going to keep on this because if the market likes or dislikes whoever they're going to find as his successor as CEO, it could really have big moves for Boeing stock. So we're going to keep a good eye on that. We've had a long rally. The major indexes lately, they're on pace for their fifth straight month going up. It's increasingly feature more participation in the broader sectors, and the potential weakness from so-called mega caps still remains a threat. So just because it's mega cap doesn't mean it's immune from going down. Because everything else going up doesn't mean the mega caps will. They started today on lower on news of fresh regulatory and competitive challenges in both the European Union and China. So we do watch those markets. If y'all don't trade the markets over there, that's perfectly fine, but we do keep an eye on their news. It does impact our stocks. Sometimes one of their inflation data reports comes out and it affects us. If their markets are up or down, it can affect us here in the US. So we do keep an eye on that. So again, Boeing, we're going to keep a really close eye on that. Shares got initial lift from the news that CEO Dave Calhoun will leave by the end of this year. Calhoun took the reins 4 years ago to right the ship after the embattled company's quality problems began the year before. Calhoun's announcement today accompanied word that Boeing's board chair, Larry Kellner, won't stand for re-election. So this could be really good, it could be really bad. Obviously, they've had a lot of quality issues lately. And the reason we're monitoring this, what if someone comes in and the market deems them as worse than Dave Calhoun, what he's done? The shares could drop. Again, if someone comes in, the market deems it as a great change, that could be really good news for the stock. So we're just going to keep an eye on that. For the tech slide this morning, it came after the European Union said today it started a probe on Apple, Google, or Alphabet, and Meta under its new Digital Markets Act. The European Union's press release said it's assessing whether the three firms do enough to allow users choices beyond the company's own platforms in features like app stores and shopping. This is coming after last week's announcements that the U.S. Justice Department was suing Apple for anti-competitive behavior related to the smartphones that it sells. So what that means is basically if you're on one of their platforms, they will market their products before anyone else's or ahead of someone else's so that you see it first. Even if something may be a better deal, may be a better product, what they're being accused of is potentially showing their stuff before anyone else's products. So that's definitely something to keep an eye on. This Friday, when the markets closed, the Bureau of Economic Analysis reports its Personal Consumption Expenditures Price Index, which is shortened to PCE, for March. The PCE, the Fed's favored inflation gauge, will be closely studied after both the Consumer Price Index and the Producer Price Index, which is the PPI. So that stoked inflation concerns earlier this month. Recent PCE reports appeared to paint a somewhat tamer picture of inflation than the CPI and PPI figures. I know that's a lot. It's everything we have to go through. It's not just one report that we look at and we decide what we're going to do. It's a lot of concentration, a lot of thinking. We got to go over all these reports. And some traders, they only go off one or another. Some, such as myself, I read all of them and take what I want from them. I don't believe there's any set way that someone has to do it. Everyone has their own style, their own methodology, and their own way of doing it. So just take it all in consideration and see what y'all think is best. In January, overall PCE rose 0.3% from December, while core PCE, which removes food and energy, increased 0.4%. Both match analyst expectations. Compared to earlier year levels, core PCE eased to 2.8%, down from 2.9% in December, and the lowest annual rise since March of 2021. So, got to keep an eye on that. Futures based on SP 500 index were down 0.3% shortly before the close of overnight trading, and futures based on the NASDAQ 100 were down 0.5%. Futures based on Dow Jones Industrial Average fell 0.15%. A slight gain in Treasury yields appeared to be another weight on stocks this morning. So pre-market hours can be very detrimental to the entire day. Sometimes, if things drop, you got that 7 o'clock sell-off. We all know that's going to be coming most days. And it's the pre-market hours. That's what I love about pre-market. More volatility, less volume. It lets things flex more. It's amazing. Pre-market, post-market, it all ties in with regulation hours. So this morning, the 10-year U.S. Treasury yield, TNX, rose a fraction to 4.22%. The U.S. dollar index, DXY, swung higher to 104.4. The CBOE volatility index, VIX, jumped to 13.54. Crude oil was steady at $80.80 per barrel. Bitcoin rose 2% to just over $67,000 per Bitcoin. So, Wall Street's entering the final week of quarter one, emboldened by the outlook of the economy and confident the Federal Reserve will pivot to a rate reduction phase later this year. This week, which will be shortened by Good Friday's holiday, begins with futures trading building a roughly 73% probability of a 25% point June rate cut. And we've been going over these percentages lately, and they're looking more in favorable of this decision. Last week's Federal Open Market Committee, FOMC, meeting helped fuel beliefs that the Fed is getting closer to its first rate cut in 4 years. The FOMC kept its benchmark funds rate unchanged as expected, while also maintaining its dot plot projection that suggested it will make 3 quarter-point cuts by the end of this year. So again, a lot of charts, a lot of stuff to look at. We're just watching all kinds of things. So earnings calendar is kind of empty, and the only major U.S. report on track for this week is February new home sales due at 10 a.m. Eastern Standard Time. A host of housing data last week, including existing home sales, housing starts, and permits, all came in stronger than analysts had expected, reinforcing impressions the economy remains strong despite expectations of slowing economic growth this quarter from quarter four. The Atlanta Fed's GDP now gauge has been steadily revised lower to 2% from over 3% just last week, representing slowdown from the 3% pace in quarter four. Analysts expect today's new home sales report to show Analysts are expecting today's new home sales report to show the annual pace at 680,000, which is up from 661,000 in January. Other numbers to watch in the report include the median sales price, which declined 2.6% to $420,700 in January, the fifth straight month of declines. So beyond that, several economic readings this week could influence interest rate expectations and market direction. Tomorrow, which is Tuesday, the 26th of March, the U.S. Census Bureau reports durable goods orders from February, and the Conference Board released its Consumer Confidence Index update for March. Obviously, we're going to keep a good eye on that. Thursday of this week brings government final estimate for fourth quarter gross domestic product, GDP, and University of Michigan's final index of consumer sentiment for March. And of course, the key data point this week is Friday's PCE report. Stocks that are going to be in the spotlight. So we're going to have the semiconductor index that gained 3.2% last week. We're going to be keeping an eye on that. NVIDIA really helped lead the way with a gain of 7.3% last week, and shares closed Friday at a record of just under $943 a share. With 4 days left in the quarter, semiconductors are on track to be the strongest performing sector so far this year. SOX, which is the PHLX Semiconductor Index, gained 17.6% for the year through last Friday. So that's not counting today, that's for last Friday. The S&P 500 Communications Services Index, which include Alphabet, Meta Platforms, Netflix, is not far behind with 16.4% in advance. So profit, they're up. So with all that news, we also want to consider two major semiconductor firms struggled this morning ahead of the open, which is Intel and AMD. Both fell 3% after the Financial Times reported that China has introduced new guidelines that will mean U.S. microprocessors from the two firms are phased out of government PCs and servers as Beijing ramps up a campaign to replace foreign technology with homegrown solutions. This might spread to Microsoft as well, with Microsoft Word under a potential microscope here. Banks have been among the weakest performers as the industry continued to shake the hangover from last year's regional banking crisis. The KBW Regional Banking Index, KRX, was down 10.2% this year through last Friday. On a brighter note here, last week we saw a lot of improvement across the entire market, which means more sectors were participating in this rally. This is typically a healthy sign. Again, we will see. Investors continue rotating to value stocks and other sectors beyond technology. Materials, energy, financials, industrials, and utilities all feature 80% or more of their member shares trading at or above their 50-day moving average. So that is something positive to think about. Earnings season is mostly finished, though a few major companies report quarterly results this week. Cruise operator Carnival, CCL, is expected to report quarterly earnings this Wednesday, while pharmacy chain Walgreens Boots Alliance, WBA, which was recently removed from the Dow, is expecting to report results Thursday. As in a prior video, mentioned that once a company is taken out of the Dow, it tends to do better than the company that was added in. So we're going to keep an eye on this. It's going to be interesting. Stocks that are on the move, Disney, which is DIS. Their shares rose 1.2% in pre-market trading after the company received an upgrade from Barclays, better than expected free cash flow and earnings guidance for fiscal 2024 helped investors gain more confidence about Disney's earnings estimates and having bottomed, analysts have said. Again, depends on which analysts you listen to, how many of them say it. It's all relative as to what you would trade as. Tesla, TSLA, fell 1.2% on a downgrade from, I can't pronounce this one, Mizuho, Mizu. If I pronounce that, I apologize. The firm said near-term electric vehicle demand and tightening liquidity are creating challenges into 2025 and now sees 2024 EV growth up 15% year over year versus up 25% previously. Analysts also downgraded Rivian and NIO, citing slowing demand and increasing inventory. A stat that I'd seen about a month ago that kind of ties into this was Hertz Rental Company. They were selling 20,000 of their electric vehicles because nobody wants to rent them. Nobody wants to go have to find a place to charge them. They just want to fill up with gas and keep going. So it's very interesting to have this news as well. So keep an eye on that. Boeing rose 2% in pre-market trading on the company's leadership news, which we already went over. And so it's just going to be a lot of stuff to be thinking about. S&P 500, it's been slowing down. Global shipping shaking off COVID snags. And it seems like sometimes they're still trying to keep on the COVID train for keeping prices up. We're having all this transportation that's gotten back to normal. And we're not having all these people out of work. Things are going back as business was, yet it seems like things aren't back yet. So it's one of the things to remember is there are transportation stocks. It's not just the end result, the end product that you have to buy. It's not just the manufacturer. It's not just the seller, the middleman. It's also the transports. They are transporting a lot. The transports are going up. So it's something to look into for stocks. It doesn't have to just be a wholesaler, the retailer, the manufacturer. There's transports that can be very profitable if you time it right. So just to recap on our calendar that we're looking at, tomorrow the 26th, durable goods, S&P 500 CoreLogic Case Shiller Home Price Index. The 27th, EIA Weekly Petroleum Status Report. The 28th, weekly initial jobless claims. That's something we really want to keep an eye on. March 29th, U.S. market closed for Good Friday. So if y'all like me, y'all will most likely forget that, because I know I will. I will get ready for work. I'll get on platforms ready to trade, and it's closed. So it happens. We all do it. April 1st, though, construction spending, Institute for Supply Management Manufacturing PMI. That's what we talked about earlier. It will be coming out on April 1st. So just keep in the news. It's very important to stay up to date on what's happening. I get it. We can't do it 24/7. We need breaks. We need sleep. We do have other things we have to do, but staying up to date on the news is very important. So hope y'all enjoyed all the content. We got more coming out soon, and I'll see y'all in the next video.